What's good, YouTube? What's good, people? What's going on? How is everybody doing? How is everybody doing out there? I guess you guys having a wonderful trading week, and I guess we're doing all that we have to do to stay on our plans and our discipline, and to most of all, stay consistent. That's your boy Harlem, I repeat, and I'm back with another video. Today's video gonna be a trade breakdown of how I took a trade. I think it was on Monday. Nah, it was on Tuesday. How I took a trade on Tuesday on the NAS. Right. So now this video is mainly based on risk reward ratio. What is a aligned risk reward ratio? Right. So I need you guys to understand that this is entirely based on experience. Right. A lot of people can be against this video, and some people can fuck with this video, but I just want to let you guys understand the power of risk reward ratio, right? So don't forget to like and subscribe and share and turn on the notifications so you can get notified every time I upload new videos, and to sign up with the broker that I use, Quick Trade, right? So let's remember that we base our plans from our weekly outlooks, right? And we look into the week throughout the plans that we planned out, right? But I'm not saying that whatever that happens, I stick to it, because the market sometimes doesn't respect what we are anticipating, right? And then it does the opposite, and we look for something opposite. Sorry. So on the NAS, I did say that I don't have a trade idea on Monday, right? But when you remember, price is in a clean downtrend, right? Intraday moves, we're in a clean downtrend, right? So I took this trend line and I was like, okay, we have something like this, because now this was Friday, right? And we opened right there on Monday. So I had price below here, creating this lows, right? Creating this intraday support, and I have price kind of like correcting. So when you see that price was in a double, some type of push phase, an exhaustion phase, and a push phase again, but creating some type of support and double bottom, right? We anticipate price continuing to the upside, but unfortunately price continued to the downside based on what price having multiple touches on our brick wall, right? So with a third touch that clearly gives you a sign that price might be looking to continue to the downside. But we have a double bottom that price might be giving us, right? And we have some type of bullish momentum. So you can kind of like think that, okay, price might be looking to be bullish, but you simply need to wait for price to break above this third touch, and second thing, to break what our trend line, right? So when I see, okay, now on Monday price is kind of like moving sideways, right? When I woke up around 6 7, okay, price is kind of like moving sideways. So all I'm waiting for now, because price is kind of moving sideways, it's that if it happens that price trades below this correction, that I simply continue bearish based on price having a push and a correction, break below, anticipating a push to the upside, to the downside. Or if price fails breaking this correction, then we anticipate what, some type of anticipation of a reversal to the upside once we have price breaking this zone right here. Once you have price breaking this highs, this intraday highs, because price is in a correction, obviously, right? With bullish momentum in the break of our trend line, that gives me a sign into what, okay, price might be looking to do what, to continue moving to the upside. But the tricky part is, because if you remember that price now intraday moves, we are in this correction, right? We are in a correction, right? So now, in order for this correction, or in order for this reversal to be finalized, it somehow needs to happen that price needs to come back to retest this very same zone and look to continue to the upside. But if you see what happened on Monday, price was kind of like doing some BS, right? Price was kind of like moving the way it wanted to move. So Monday, I didn't take the trade. right? Monday, I didn't take a trade on the next because price was kind of like doing what it was doing. So when we move now, okay, slash, we continue moving. It's Tuesday now. Okay, when I wake up, I can tell that okay, price is still moving in some type of correction. I don't fuck with this move. But the only thing I'm waiting for, because we have this intraday highs that price has printed out, right? We have this intraday highs that price has printed out. Let me remove this. Okay, we have this intraday highs this price has printed out. So obviously, because now when I now see, okay, we're having some intraday highs or some type of resistance, all I'm waiting for now, because now it's Tuesday. Remember that Monday we didn't take a trade because what we anticipated price didn't respect it, right? Waking up on Tuesday, we remember that we have Monday's highs. We have this highs that price created on Monday, right? And two, we have price creating this highs, and we have price doing what? Trading above this very same previous intraday correction lows, right? If you look at it that way, right? So when it now happens that okay, all I'm waiting for now is because prices created this intraday highs. If it happens that price comes back to the highs and fails breaking above, then I will take a sell or short positions based on price failing to break above intraday highs, anticipate a move to the downside, right? Taking a clean 1 to 2, right? But it happened that price did what? Had a break above the candlestick after our London session opened, because our London open rejected, right? And the coming candle did what? Broke above. So when you see now price at a break above, all you need to wait for now is for a retest, people, a retest, break and retest, and that's it. So price had a what? A breakout, right? And price came back to our very same zone. So when you see now price is kind of like trading above this very same previous highs, when you see price trading above this previous intraday highs, that clearly confirms to me or to us that price might be looking to do what? To continue moving to the upside, right, people? Based on what? Based on based on price breaking our trend line, breaking our break ball, or our bear move to the downside, with price moving to the downside and kind of like moving sideways, breaking out of our trend line and breaking out again off of our intraday highs. All you now need to look for is for price to continue moving to the upside. But why am I saying is price looking to continue moving to the upside? Long as price still respects our resistance or our intraday highs, or long as price still trades above our intraday highs and respecting our intraday highs, then we have a clean retest and we still look to anticipate what? And move to the upside. You get me, people? So now I was technical with you guys, right? Now we were talking about the technical side. You guys understand me? So when I now want to switch up to the risk reward side slash psychological side, I need you guys to understand that it depends on what risk reward you trade. Some people are comfortable with a 1 to 1. Some people are comfortable with a 1 to 2. Some people are comfortable with a 1 to 3. Some people don't see a 1 to 1 as a profitable reward. Some people don't see a 1 to 2 as a profitable reward. Some people don't see a 1 to 3 as a profitable reward. Some people don't see a 1 to 5 as a profitable reward. They choose a 1 to 10. So when you now understand that, people, is that as traders we have trading edges, right? We have a trading system, or we have a trading edge, how you trade or how you execute your trades, right? You know that when you're now trading breakouts, you look for a 1 to 1. Or when you're trading maybe a reversal, you look for 1 to 3 or 1 to 10, or you look for 1 to 5 or whatever risk reward you might be looking for. You need to understand that it clearly depends on a trader himself or herself into what risk reward they are comfortable with. I'm comfortable with 1 to 1, 1 to 2, 1 to 3 based on how I trade. Some other traders might be comfortable with it. Some other traders might not be comfortable with it. It entirely depends as a trader what they are comfortable with. So on this trade on Tuesday, I was clearly comfortable with a 1 to 1 because I knew that price still has previous highs that it needs to tackle out, right? I knew that price do have previous highs that it needs to take out. So if it does this, then I clearly need to look for what a 1 to 1. But if it does this, I look for 1 to 3 and look for 1 to 10 or whatever it might be, right? So I need you to understand that you don't have to feel uncomfortable for taking profit with a 1 to 1 or for taking profit with a 1 to 2 or 1 to 3 when some other traders are posting 1 to 10s or 1 to 15 or 1 to 20s. It's them. You need to focus on you. You need to focus on taking the best trades that make you be confident and comfortable enough to say you are a profitable and a great professional forex trader. Do you guys get me, or do you guys understand where I'm going with this? So without further ado, people, I just wanted to break down how I took this trade and also share the power of your risk and reward. I didn't share much, but I'm just sharing some things that I know. It's up to you guys. Are you gonna comment so I can break down fully what I'm trying to say or what I'm talking about, or should I just upload the video talking about everything that I'm talking about? But without further ado, don't forget to like and subscribe and share and turn on the notification so you can get notified every time I upload, and to use the broker and to sign up with the broker that I use on my link, or to get a hold of me or our trading terminal. I'm gonna leave the link in my email and I'm gonna leave my numbers. Without further ado, people, this is your boy Harlem. I'm out.